A couple of strategists that I follow believe the rally can persist as a result of two forces. The first is evidently solid corporate earnings. That's what drives the market. And secondly, easing interest rates.
Emmet, how are we getting on? Happy New Year.
Many happy returns, Mike. Good to see you. Back where we belong. All this Christmas, New Year stuff gets in the way of good podcasting, doesn't it?
Oh, I don't know. It's terrible. I had 2 full weeks off pretty much, and then the day I come back, I started getting like throaty and a bit husky and all the rest. It's just too soft. Can't handle one day of work.
Oh, yeah, I know. I'd say your hands are very soft.
haven't worked a day in my life.
Show Mike a shovel. He's like, "What is that thing?" It's like, "Well, Mike, that's the way work used to be done."
Yeah, little soft computer boy.
Yeah,
How are you?
I'm good. Did you have a good break?
Lovely. Yeah. It was great. It's home in Ireland for a good bit now. Still am actually. Yeah, home for another few days until I fly back.
Doing the mother load of washing. You brought it all the way home from France.
Every garment I had came back in the big suitcase.
Mike, I actually heard an interesting concept over Christmas. I was chatting with my wife who told me that she and her friends had reduced their New Year's resolutions to a single word. So that was easy for them to recall and to reference. So, for example, one of her friends just said declutter, which speaks for itself. So, as you know, I slacked you last evening and I said, hey, come up with your one word New Year's resolution. And my question is, did the muses sing? Have you got a one word New Year's resolution?
Oh, it's tough. How does measure sound?
Not as easy to understand as declutter. Like you could measure anything. There's Mike. He got a yardstick and he's measuring everything, measuring the height of that door. Measuring like what do you mean?
I just because that's a tough, kind of a way to put everything into one. But I think
it's hyper reductive. It's over reductive.
It's under the term what gets measured gets managed. So if I can kind of keep on top of things in terms of what I want to do this year, across everything.
Yeah.
And kind of like doesn't have to be a journal of sorts, but a log of kind of not getting distracted by stuff. So measure would be mine. What about yours?
It's good. Actually, I like it when you explain it. And once in your own mind, you realize what it meant. Because I actually think it's a great starting point or very, very, very quick reference point for you throughout the year to see how am I doing with decluttering or measuring. Yeah, I was thinking about it too. And I don't know, maybe mine's a bit pretentious. I was thinking of the word rise. There's an obvious association with investments. I want them to rise, but at a personal level, I want to just be better. I want to rise above noise. I want to rise above panic and any angst, and rise in patience and rise in generosity. And if I'm always rising, or at least trying to rise, I think everything around me will follow.
Very good. I like that. Yeah. That's a good one. Good to I suppose it is one word, but you're trying to throw everything into it.
Yeah. Slim. That's probably the one that most people would.
Yeah, well, I suppose
down if I'm allowed a second word.
That'll fall into my measurements for sure.
Oh yes, exactly. Yeah. Right. So what we talk about? I mean, we've got a fun-packed show. Like I know what we're talking about. Tell me, what will we talk about?
What are we talking about today? Well, this is very open-ended, and I've kind of gone a bit of you on it in terms of being a bit liberal with our what's the word, objective. But we kind of said like looking ahead to 2026.
I'm rising right now. I'm rising above that, Mike.
You're rising above that. I'm giving a very measured response. Which is looking ahead to 2026. So it can be predictions, it can be what you're watching, or just in general. I think it's a good way to kick off the year in terms of kind of looking inward, looking at your own portfolio, looking at your own strategy, and seeing if it'll be sustainable. And with that in mind, my first kind of, it's not a prediction at all, really. I just kind of got a bit contemplative over the market in general over the last few years, because it's been so incredibly resilient and it's been a great time to be in the market in general. And I think the tendency is to go towards maybe feeling like this isn't sustainable. And maybe it is, maybe it isn't, but just to give some context of kind of where I'm going with this to kick it off. So this is the last 7 years of the S&P 500 since 2019. So 2019, the S&P 500 was up 31%. 2020 was up 18%. 2021 was up 28.5%. 2022 it fell 18%. 2023 it was up 26%. 2024 was up 25%, and last year 2025 was up 19%. It's also worth pointing out there that the COVID crash happened in the middle of 2020, and 2025 had the whole Liberation Day debacle as well. So contained within this incredible run of results are very severe downturns and then quick recoveries. So the market has been so incredibly resilient the last 7 years. It's doubled kind of its long-term average performance. If you're looking at, say, between 9 and 10%, and this is going at about 90% on average in that time frame. And like this isn't for me, like this isn't saying that 2026 is the year, the gravy train stops or whatever else. But I guess my thinking was that, it will eventually. And when it does, what are you going to do? Because this is how people really lose money in the stock market, is through panic and getting overly used to easy investing, if that makes sense. So when you look at your portfolio, like, are you looking at a collection of businesses that you would be happy to hold for the next 20 years, irrespective of what the market does in the short term? And are you just, is that hopefully what you're doing? And I think a lot of listeners to this podcast is what they're doing. But are you doing that, or are you just buying stocks that go up? And like, this is a trap I fell into personally. So this is probably why it's come to mind so quickly for me when I'm looking ahead to 2026, was kind of, I first really started investing in 2020 up to 2021 was where I was really putting money in the market, right around that GameStop mania. And it's probably one I'm still recovering from, in a sense, more mentally than actually like financially. We've enjoyed a really great run, and I don't think that should stop anytime soon. This market itself has proven itself to be so incredibly, I keep using this term resilient, but it is just so incredibly resilient. It's a feeling of like irrelevant to what happens. And we saw at the start of this week, like with the geopolitical tensions in Maduro and Venezuela and everything, and the market opened up green on Monday. That's a testament to it, I think, is that there is a real sense of positivity. You could go on exuberance in this market, and look, however long it lasts, we'll be there to enjoy it. But it is worth looking at, kind of, say, the pitfalls out there too. Our valuation's too stretched. Will the AI trade finally cool off? What happens if Nvidia misses earnings? I don't think there's one business that has ever been so important to the overall function of a market, to the other 3,000 businesses that are in the market, so dependent
Even
on one.
Sherwin-Williams paint maker will fall.
Exactly. And like, there's more systemic stuff. Like, we have a new incoming Fed chair this year. What's going to happen there? Is he going to bring down interest rates too fast? What would that cause? Will you not bring them down enough? Will inflation stick around? Will AI begin to cause, severe unemployment? Is this the year that happens? Will it ever happen? I don't know. It probably will. But there are 100 different catalysts that could end up causing some form of market hysteria. And a lot of people are of the opinion that, look, maybe something like that is necessary, that this rise in stocks can't go up and can't go on forever and ever. And the longer it does, the more painful that eventual crash would be. So this is more of a rant than a prediction, but it is a good time of year, I think, for people to just have a little reminder that something like that will eventually happen. And it's a good exercise to think about and how it might affect your investing mindset. If your portfolio fell 30% tomorrow, would you be buying more stocks, or would you go into panic mode? So as we kick off the year, I think it's a good opportunity to have like a little mini audit. Ask yourself, why do I own this stock? Is my portfolio diversified enough? Is my safety net sufficient? Could I handle the mental strife of an extended downturn? Would my strategy change in any way, or would I continue on as normal? Because I know that this is a lifetime of work. It's not just kind of a little bit here and a little bit there. This is me building up something over 20, 30, 40 years to bring myself kind of security financially for the rest of my life, and hopefully for the generations that come after me. So that's not really a prediction, but it is more so a kind of, it's an important time of year to think along these lines of, we've had it really, really good.
It's a forward-looking reflection.
Exactly.
Well, one thing I would say, Mike, I think I'm totally in agreement with everything you've just said, but what I would add is that if you make predictions on a year that turn out to be correct, you were lucky. Like, in fairness, you can read the direction of travel on any given topic and call it quite well for the 12 months that follow. But a year is really, it's nothing. It's nothing. And as you said, setting up for generational wealth is a multi-decade strategy. So despite the fact that a year is nothing, it is guaranteed to deliver a lot of surprises, surprise after surprise. And Ben Carlson, who we've spoken about in this podcast before, and who I've been meaning to ring to invite to InvestCon 2026, must write that in my diary in a moment. But he wrote a very interesting post there on day before yesterday, 4th of January, and it was called Six Surprises from 2025. And he opens it by saying, an old boss of mine used to say, it's okay to be surprised by what happens in the markets. Just don't be surprised that you're surprised. And he lists six things that happen in the market, and I'm sure he talks about it in his own podcast. So tune into that one, folks, if you're interested. But he did mention, as one of the six surprises, that only two of the Magnificent Seven beat the market. And
Yes.
even though we look at the Magnificent Seven and see it as the engine of growth for the entire of America Inc. or S&P 500 at least, that's Microsoft, Apple, Amazon, Meta, Tesla, and who am I missing? Nvidia,
Nvidia.
Google, Nvidia. That's the
Yeah.
seven. Only Google and Nvidia outperformed the market.
Yeah.
So, so
Could you imagine if we were at the start of 2025 and we would be like, the Nasdaq is going to grow 23% this year, and Amazon is going to grow 3 or 4%. It's
yeah,
kind of an
I know
outrageous statement, but
it
this
is.
is how it
Yeah,
worked out, and
yeah,
it's
yeah.
a very strange. 2025 is a very strange year in general for the market, I think.
Yes, it was. Oh, very much. Very, very strange. But I think your overall kind of don't like the party will come to an end, and then it takes a breather, and the party will resume, and that
Mm.
is the way the market goes. And
And counterintuitively, like over the in course of an investing career where you're putting money aside every month for 30, 40 years,
yeah,
that's going to be the most profitable time of your investing life.
unquestionably so. You put $200 aside every month or whatever your frequency is. That $200 will go a long way when you're in the valley of disillusionment and there's been a crash or a correction or a recession or any other variation of a downturn. Your money will go way further. But I tell you what is going to be short on the ground as well: belief. You're going to be surrounded by naysayers when the market is at its lowest point, telling you it's all over, when it's never all over. It's actually the time to get greedy, and who am I paraphrasing? Get
It's
greedy
the
when, yeah,
when blood is on the streets, the
when
Warren
blood is
Buffett
on the
quote.
streets, Warren
Yeah.
Buffett. Yeah. Well, I'm going to use one of Ben Carlson's six surprises from 2025 as a segue into one of the things I'll be watching in 2026. And one of his six surprises was that self-driving cars became a reality. And specifically, he talks about how Waymo scaled rapidly with millions of rides in 2025. And this kind of was one of the reinforcement points about optimism around AI driven technological processes and its application to everyday life. And one of the two topics that I'm going to throw on the table, I don't want to say predictive, but certainly be watching and anticipate for the year ahead, is, and I dread to be original, but I think this is going to be an extremely important year for Tesla. Because if you want to understand Tesla in 2026, you need to hold apparently two contradictory ideas in your
It's a bit
head at the
like
same.
Double Think from 1984.
Oh, exactly. You have to double think. Because, first of all, in one corner, Tesla's core car business is under real pressure. It's been in the news in the last few days, how BYD have now overtaken them, not by a small margin on the number of cars shipped. And so, on one, its core car business is under real pressure. And then in the other corner, the opposing thought is Tesla may still be the most ambitious applied AI company in the world and deliver more to humanity with AI than anybody else. And both of those two things can be true. And the tension between them is really what makes Tesla one of the most fascinating and divisive companies to talk about right now. But I'm going to start, if I may, with an uncomfortable truth, the bear argument. And the uncomfortable truth is that Tesla, the car company, is slowing down. and its vehicle deliveries fell again last year. So that's 2 consecutive years of decline, and it also lost its position as the world's largest EV seller. And the fourth quarter numbers came out there the other day. It totaled 418,000 vehicles, 16% down year over year, and that squarely missed Wall Street's estimate of 426,000. And Europe was particularly weak, and the end of EV subsidies in the US really exposed something important, which was a chunk of recent demand was pulled forward, but not permanently created when incentives disappeared, sales slowed down. So it was apparent that incentives worked. That's no great surprise. But what we're left with is the tide went out and Tesla's shorts were half were half down. So it responded in the only rational way it could. It basically offered cheaper, stripped down versions of the Model 3 and Model Y, and that kind of kept volumes propped up a bit. But it also tells you that pricing power is not what it used to be. And then, as if we all didn't notice already, competition is very real. And as I said, BYD is powering ahead. China is now ahead on cost, it's ahead on scale, and margins for Tesla are under real pressure. So if Tesla was just a car company, this would be a much less interesting conversation, and undoubtedly, without any question or doubt, it would be a much, much lower valued stock. But Tesla, as we all know, isn't a car company, or at least isn't only a car company. What's interesting is that even as it slows, legacy automakers are still struggling to replicate what they did in the first place all those years ago. So, they can build competent electric vehicles, the other guys, Ford and friends, and some of them are very good, but many of them fail the expectations test. So Tesla's earliest successes came from the very simple idea, which was build the best car, not build the best EV, just build the best car. Performance, software, range, and experience all came first. In fact, that was electric was almost secondary. And that's why Tesla continues to feel fundamentally different from the legacy car makers of Detroit and other places around Europe, Germany. And even as the hardware gap narrows, because it is narrowing, you get into a new Volkswagen, I don't know what they call ID or electric Volkswagen, and they look and feel great. And I'm sure they're lovely to drive. But where we're at is that the stock is no longer priced on cars. That ship for Tesla has sailed. And most of its revenue, of course, still comes from vehicle sales, but the valuation doesn't. The market is underwriting what Tesla might become. And I'm getting to the point. What's this to do with 2026? So what might it become? It might become a business all about autonomous driving, robo-taxis, humanoid robots, energy systems, and I suppose a vertically integrated AI platform. That's why weak delivery numbers have not broken the story. Like those numbers the other day, I was like, oh, heavens above, that is not a nice read. Investors are not betting on a cyclical rebound, they're betting on another transformation, which brings me on to Elon Musk. And its future, Tesla's future, is increasingly, I suppose, defined by a set of these really audacious goals, which we spoke about when they offered him the big pay packet. How much was the number again? Can you remember?
It was over $1 trillion if everything.
Yeah, I thought that was the number I had
if
in my
everything
head.
Was met, but that's a
yeah, which kind of means
if.
he's to grow the company's share price by 8x in something like 7 years. I can't remember, but anyway, the future is set by these audacious goals, and the aim is to turn the company from an automaker into all the things that I just said, all those other things, and the incentives are aligned around execution, not little incremental improvements, which is how all the other guys behave, right? So Musk, and here's the crux, and I'll get to the point. Musk has always sold the future before it arrives. Like that's his the way that's his swagger. He's always promised a future and then it's caught up. But the real question for 2026 is whether the timeline finally starts to converge with reality. Because I'm of the opinion that hot talk don't matter no more. How's that for grammar? I mean, like if he is the Steve Jobs of the 2020s, which I think is a reasonable argument, or at least he is a Steve Jobs of the mid 2020s, we need to see something new delivered. And if I had to pick one variable that matters more than anything else for Tesla in 2026, it's autonomous driving at scale. Either Teslas deliver safe, reliable, commercially viable autonomy, or it doesn't. And demos and the promises and the flashy unveils and the lovely gold colored cab and all the rest, lovely eye candy, but it ain't reality. Now, I happen to think he will. A functioning robot taxi network would change Tesla's business overnight, because cars effectively stop being depreciating assets and they start to become these income producing ones. And software like margins suddenly get layered on top of hardware economics. I mean, cars, through fancy speak, are just hardware economical investments, depreciating investments. And the valuation framework completely gets turned on its head. So this year, I'm going to try to not watch flashy unveilings and robots dancing with Musk on the stage where he talks about R2D2 being the translator for C3PO. What I will be watching are regulatory approvals, real world accident data, which is very important in self-drive cars, and actual commercial rollout, and whether autonomy works outside of these tightly controlled pilots, because that's where the truth is going to show up. And then, before I shut up and let you have a bit of airspace, there's also these humanoid robots. I mean, you can dismiss the Optimus as science fiction, and in the short term, I think that's kind of fair. Like, we've seen the robot now. I think anyone who follows the story has seen the Optimus robot, but the addressable market, it is enormous, in fairness. And general purpose robotics don't change just one industry. It completely re-engineers the concept of labor itself. And you said there at the top of the podcast, will AI start to stand down jobs at scale? You said words to that effect. Well, does Optimus move from concept to constrained real world utility? Will they be rolled out to factory floors and warehouses and doing repetitive tasks before the end of this year? I suspect not in 2026, but it would be a nice surprise. And then finally, one part of the Tesla story that gets far less attention is energy. We've spoken about it on the podcast: storage of energy, grid solutions, energy management. They don't grab the headline because it's a bit of a snore fest, but unlike the robotaxis and robots, which are totally and utterly, sexy machines, but the energy storage and solutions, they generate recurring revenue, and that really fits nicely into Tesla's broader ecosystem. And if vehicle margins remain under pressure, energy indeed could become a stabilizing force that the market really hasn't appreciated. So where does that leave us for the year ahead, 2026? Well, today Tesla is a company, I believe, in transition. We all have a read on what it does at the moment, and we have a few promises in the bag. But transitions are very often messy, and they're very often slow. Sales are under pressure. Competition is intense. China is leading on volume and cost. I presume margins of fact are no longer expanding in the motor division, and yet they have this unmatched software integration in vehicles. It is still one of the most advanced autonomy stocks in the West, and it still has leadership willing to bet the farm on transformative outcomes, and that makes Tesla neither a simple value play nor a straightforward growth stock. So what I'm going to watch in 2026 is a checklist, and my checklist is: does autonomous driving move from promise to a product? I'll also consider, can vehicle volumes stabilize without crushing margins? And do robotics and energy show real operational progress? And perhaps most importantly, does Tesla start to look less like a story stock and a car stock, and more like a company where all those other realities are catching up with the ambition? And if the answer to even just one of those is yes, like the a fleet of cars has been unleashed on a city in America and has been working out well. I think it is going to be one of the most consequential companies in my lifetime. And if not, well, it already has been. It's a $1.5 trillion business. It's not like we're talking about a candy shop on my local corner. But I do think that if in this year we don't see one of those new things happening properly, there's a good chance that gravity is going to win and the share price will be pulled down. But either way, for 2026, this is not going to be a boring company. It's going to be an interesting story.
Yeah, I'm glad you brought up autonomous because did you see Jensen Huang's comments from this weekend? No, he's at that
I did not.
CES conference.
Yeah, what did he say?
It's like America's top tech conference.
Yes.
He said a bunch of stuff. Basically, I suppose we could have a full episode on this, but he said a bunch of stuff about the next kind of generation of chips beyond Blackwell and all the rest, and
Yeah.
the kind of next step, I suppose, in the AI infrastructure build-up. But what I picked up on, I thought was really interesting, was he said that Nvidia's autonomous driving platform is going to be ready soon. It's going to be open source, and it says it'll have the capability to give level 3 or level 4 driving to pretty much
Oh.
any kind of fairly developed auto manufacturer out there. Which, and like we've always talked about, Tesla is doing it in a completely different way to everyone else. So I don't think it should change the picture there too much.
Hmm.
But it is really interesting. I think we should get Derek Riley on to talk autonomous some point early in the year. He's
Yeah,
a
for sure.
EV
Derek
expert.
is our local. Yeah, he's our local EV guru and founder of Nevo, and it's a brilliant thing, Nevo. But Mike, just on that, then I have a picture in my mind of Jensen Wang presenting Elon Musk with the latest and greatest Blackwell chip there a few months ago, and there was a little bit of mini ceremony in the office, and they both said nice things about each other. So I really should know this, but I presume the Tesla autonomous network is built on Nvidia chipset.
Yeah, this is its own thing. This is like an open source
Hmm.
platform, so people kind of plug and play per se.
Yeah.
Um, so
Will
yeah,
we
it's an
do it?
interesting
Oh,
one.
that's good. Will we do it so? We should do one of those.
Yeah,
You had
get a
me at
fleet,
open.
get a fleet of cars first.
Yeah.
But yeah, I just think autonomous will definitely be a theme this year, and I always look at it through the eyes of Uber because I think the best thing I've read on autonomous was actually from the Uber CEO Dara Khosrowshahi. He was on Ben Thompson's Stratechery,
Hmm.
and in terms of kind of big picture how this will play out, I think you give a really strong argument for the kind of consolidation of the the technology in a sense. Because like if Waymo becomes number one autonomous robot taxi platform by a distance and there's no real competition, Uber is see it like good luck. But if
Mm.
Uber turns into the aggregator, and I'm not turning this conversation about Uber, I actually have an actual point I'm going to make about talking about an industry or a prediction. But if Uber becomes the aggregator in a competitive market where there are a lot of different robotaxi networks, then it's going to be a boon for the business. And this sell off, which has kind of happened at the start of last year as well, with this fear of autonomous driving and especially fear of Waymo's scaling, just seems a bit preemptive and probably a bit of scaremongering involved. I've seen a few price downgrades on
Mm.
Wall Street, kind of selling off Uber and make it a very interesting opportunity. So that's a little bonus on Uber in this whole autonomous vehicle conversation. But yeah,
But I
sorry,
think, as we all know, whether it's weight loss injectables or CRISPR or quantum computing, very, very, very rarely is it a single. Is there a monopoly in
no,
technology? There's no monopoly. So Waymo, we might find in 5 years, Waymo is the winner, and so too is Tesla, and so too is Uber. And I think most you and I would probably agree. Yeah, that's true. Those three will all be winners.
yeah, yeah. I think the biggest diff is on Tesla in case of if this actually plays out, just because they're doing a strategy that's so unique to them. But
And so
yeah,
much cheaper.
so much cheaper. Exactly. It's like if it
Yeah.
does play out, it's different
Yeah.
level. So
Kathy Wood over at ARC, she's all in on the Tesla way, if you like.
of course, she has to be, doesn't she? That's her whole
Yeah.
that's her
Yeah.
whole shtick.
Yeah.
Okay, but this second one, it's not really a prediction again, but it's just,
Mm.
what's the point of giving out a
A
prediction for 12
comment.
months when we want to
Yeah.
find stocks to hold for 240 months? But
Yeah. Yeah.
whatever, it's an area niche that I think it's going to be set up for growth going forward, and also incredibly important because so basically what is the opioid use disorder treatment market.
Oh, yeah.
Uh, so obviously this is a global issue. I'm
Yes.
framing this within a US context just because that was where it was the easiest to find kind of uh, the most well-done research essentially, and it's always going to be the most lucrative market when it comes to pharma as well. So to give some kind of background, the scale of the opioid crisis in America has developed to the point that it's now the number one cause of death from 18 to 44-year-olds,
Really? Isn't that tragic?
and yet it's kind of an imbalanced it's an imbalanced situation in the sense of the size of the treatment market comes nowhere near to matching the size of the problem.
Mm.
So the National Survey on Drug Use and Health estimates that there is about 8.9 million people who misuse opioids. This could be severely underestimating the scale of the problem as well, because there was a recent study from Rand and the University of Southern California that found that 11% of adults reported illicit opioid use within the past 12 months. So, it's
11, sorry, 11%.
exactly. Now, obviously, that is one study. So,
Yeah.
the point I'm trying to make is that there isn't really a gauge on how big this problem is. It could be
Mm.
anything from 0.3% of the population to 11%.
Mm.
Obviously, that 11% figure is huge,
Mm.
but it's likely somewhere in the middle. And so when you see a problem this size, it's obviously we talked about this with the cancer diagnostic conversation we had
Mm.
last month in terms
Yeah.
of there is solutions out there that have to be financially viable to make it work. And what I find interesting is how small some of the businesses that are kind of in the lead in terms of bringing forward the treatment of this disease are. So obviously, like, there's bipartisan support behind fighting the opioid crisis. It's detailed as a public health emergency. So this obviously facilitates expedited project support research. And then there's two recent bills, the 2024 Consolidated Appropriations Act and the Support for Patients and Communities Reauthorization Act of 2025. Both these bills, bipartisan approved, going through kind of extending substance use disorder prevention, treatment, recovery programs. And then actually what's really important here as well, when we're going to talk about this industry and business, is that it made permanent requirements for Medicaid to cover all FDA approved opioid use disorder medications and counseling. So with all that in mind, it's a area of the business area of the kind of market which is a bit ignored considering how significant a problem it is, how big a problem it is, and unfortunately how financially lucrative a problem it could be, if that makes sense. So like, and it's so complex to treat. Governments across the world really have to begin to start seeing addiction as a disease and not a crime, which is happening to some extent. But from that, you have like relapse risk, mental struggles of addiction, homelessness, the ability to keep a job, everything that makes treatment incredibly difficult. So that goes a ways to explaining why the treatment market is so much smaller than the size of the problem. But yeah, so there's two companies really that are looking at probably the most promising treatment area when it comes to opioid use disorder, and that's long-acting injectables of buprenorphine.
Mm.
So buprenorphine can be a more effective long-term treatment than methadone, which is what a lot of people will know, because its treatment for methadone its treatment is really unapplicable in cases of severe long-term opioid dependence. Buprenorphine, on the other hand, it's got a ceiling effect when it comes to euphoria, when it comes to respiratory depression, because this is what happens when people use opioids. They kind of stop breathing in a sense. So it's much safer for people in terms of misuse and in terms of overdose, meaning actually can be taken home as part of a normal medicine. So it's very much seen as the more sustainable long-term option when it comes to opioid use disorder. So there are two companies that dominate this space here when it comes to long-acting injectables. I could think you could make a strong argument for owning both. Neither of them are above a $5 billion market cap. And in terms of kind of the projection of growth here, I think it's a very exciting area of the business. It's also doing good in the world too. One of those companies is an old favorite of the podcast, My Wall Street. It was one of the original Nexus picks. That's Cameras.
Mm-hmm.
And
Swedish
then,
company.
yeah. And then the other is Nvidia, which was just
Hmm.
published this week as January stock of the month. It's actually where I got
Oh,
all this research from.
oh,
So
interesting.
if you are interested in the area, you want to find out more, you can sign up for stock of the month. You get the Nvidia write up alongside our whole back catalog of monthly write ups. But I just found it to be kind of this small little niche that really was worth digging into. And the fact that there's only kind of two companies leading the space in this, ultimately it's not completely proven out treatment area, but it looks to be the most promising. The results are the most promising, and it's the most sustainable. So yeah, that was kind of my area to watch, I suppose, for 2026.
Really, yeah, no, I completely buy that, and I think for start, I'm blown away by some of those statistics as I was when I first was involved in research of cameras and how big a problem it is. One thing you said, which was quite surprising to me, and maybe it was just how you phrased it, but how it should be seen, being an addict should be seen as neither a crime, sorry, crime or disease, I think were the words you
It
used.
was treating it as a disease over treating it as a crime, which is a
Yeah, but
tough.
it's funny. Yeah, sorry, those two words, neither of them fit quite well in my head as you said them, because I'd argue they're neither. Like, taking the drug is not a crime. Is it defined by law? Is it against the law to take the drug? And I presume the answer is no. It's probably illegal to sell it or buy it. And equally, is it a disease? Well, we'd need some rigorous medical debate on that subject, but I would have thought, no, it's not a disease. Um, so what is it? And to wade into those waters and define what in fact is it, could accidentally make it sound like something, the description sound accusatory for somebody who's in that situation. Certainly not a choice. I think that that's too liberal a definition. I think a disease is too tight a definition. And I think a crime is wrong, but is a wrong definition. It's a very, but of all the things you told me there, it's so startling that one survey, we don't know of whom, but that 11% of adults have encountered taken opioids. I wonder if that even means post surgery they took OxyContin
Oh, for
or,
sure. Like, as in,
yeah,
it was misused. It wasn't taken.
I
But
see.
like,
So it
that's,
was recreationally taken, if you
yeah.
like.
But that's how an awful lot of people fall into addiction, is post surgery and stuff, and they go home with a bottle
Oh,
full of
yeah,
heavy,
yeah,
serious drugs, whether it be
yeah,
Percocets or OxyContin or whatever
yeah.
else.
I had a
Yeah.
surgery about 3 years ago at the back of my neck. I had to get something removed, and I went in. It was pretty gruesome. And afterwards, or before the surgeon said, "Look, no two ways about this. This is going to be painful." And um, and at the end of and he wasn't kidding. And at the end of the procedure, I was given a tray of OxyContin, right? And I had just watched that one with Michael
Oh yeah,
Keaton,
dope sick.
Dope Sick,
Yeah.
and I flushed it. I was like, no way. I'll live with the pain now, and I did. It was fine. Actually, paracetamol did a trick, but I had a fear of that drug. Even having a small tray of 12 or 24 of them in my possession was something I just didn't even want. Now, I presume there's a lot of people who, in the years prior to Dope Sick, were absolutely, completely, and utterly unawares that this was something so addictive and that the kicks were so good.
Yeah.
But yeah, it is a very interesting subject, but it's very sad to think that so many people's lives have been so horribly changed over it. But I'm all on for cameras and the other one that you just mentioned,
Yeah.
stock of the
Indivior.
month. Yeah, you want to see them win, but I do agree with you. If the problem is huge and it needs to be fixed, and they are the two of the leading horses in getting it fixed.
Yeah. And look, there's multiple ways. This is also the problem with, talk about the complexity of treating. It's rare that if someone has, I mean, definition, it doesn't have to be a disease, but if someone has an affliction
Mm.
and they're actively avoiding recovering from it, how do you treat that person? How do you treat that person if they, you know, don't have a job or don't have a house that they can, like, get drugs delivered to, or keep a job to pay for them, or whatever else? There's so
Mm.
many pitfalls to it. It just explains a long way why it's not that profitable an area of pharma compared to other ones. But I think there is somewhat an acceptance and an acceptance of moving forward, like around treating addiction
Mm.
from
Mm.
governments and everywhere else. I think
Good.
it's becoming. I'm not sure. It's becoming less stigmatized,
Yeah.
and the scale of the importance of this problem is unavoidable now. That they have to develop more nuanced ways of treating this affliction, and I think
Yeah.
Indivior and Cameras are leading in this very promising area of it. So it'll be interesting to see how it plays out. There's definitely bipartisan support in the US, which is going to be the lucrative market for it. So yeah.
So well, let me bring it back up again. So you started by broadly discussing the S&P 500 over the last couple of years. Then I went down to Tesla, and then we've just discussed that epidemic and the two companies at leading the charge for its resolution. I'm going to go back up a level again, almost to where you started. And one of my, I don't call it predictions, but one of my thoughts is that the stock market rally is actually going to continue in 2026, despite one of the strongest multi-year run in decades, as you described. And the S&P 500 rose 16% last year. It's up 80% since the start of 2023. And it's basically now on track for a potential fourth consecutive year of gains, and something that's only happened a handful of times in I was going to say the last 100 years, but in history. A couple of strategists that I follow believe the rally can persist as a result of two forces. The first is evidently solid corporate earnings. That's what drives the market. And secondly, easing interest rates. And according to the Wall Street Journal, analysts expect, and their bench of analysts expect S&P 500 profits to grow about 15% this year, which is the fastest pace since 2021, despite what we've seen. And then the Federal Reserve is expected to cut rates at least once. I think that's pretty obvious. And even the fact that it's at least means it possibly baked in, which would lower the pressure on valuations. And tax cuts and the continuation of AI related investment might also boost corporate cash flows. And I buy your suggestion, sorry, the fact that if Nvidia hiccup, the market will falter. Um, but it mightn't.
Yeah.
And that said, expectations are more restrained than in recent years. Major banks forecasting only modest gains, low single digit to mid single digit returns, and that's, I guess, reflecting their concern about the lofty valuations we're seeing, market concentration, and indeed AI fatigue. Geez, I'm fatigued talking about AI. We see, if
100%.
like you and I last year, you try and produce a podcast that's relevant, accessible, interesting, topical, and under those few headings, you and I look at each other before each show, and we really got to talk about AI. I mean,
Yeah.
AI is mixing paint, Mike. We've spoken about it here a lot.
It's
But
unavoidable, but it's interesting you mentioned as well, the interest rate cuts, because I would imagine the expectation is a lot more than just one. Because
yes,
when
yeah,
is Jerome Powell is finished his term in May, and it's very much expected whoever comes in is going to be doing so
oh
under
yeah,
Trump's
to please
orders
to please the president.
to bring down interest rates, because
Yes,
he's been banging down the walls to get them
yeah,
down. And I think there's very much an argument that should be much lower than it is now. I think there's a wariness around inflation, and there's a wariness around data and everything else. But the new Fed chair is more than likely going to drop interest rates
yeah, yeah,
significantly. I think
yeah.
that's
You're
a
right.
fair statement to say.
It is a fair statement, and I think an unfair statement of mine to say is only one cut is expected. I'd say
Yeah.
a sequence of them. I mean, the index right now, the S&P 500, is trading, I was looking at it this morning, about 22 times forward earnings, which is way above its long-term average. And some speculative areas like Bitcoin and meme stocks have already pulled back. They've been doused with some cold water. So while I think 2026 may still be positive, and I think if I had to choose which side of the coin, I would say it's going to be up. I reckon returns are going to be harder won. I think they're going to be narrower, and far more dependent on earnings growth, as opposed to blind enthusiasm powered by AI.
Yeah, but then again, like, AI is what's pushing earnings growth. We talked at length about
Yeah,
the top performing
yeah,
S&P stocks, and there are all these relics from 50 years ago from the first internet boom, but
yeah,
they're all projecting earnings growth of 100%,
yeah,
100%
yeah,
growth year over year from the year before, and they're running out of capacity, and the demand is untouched, and they have 8 years of logged order books ahead of them, and it just they go hand in hand. I know the AI
yeah.
hype is there, but it's there for a reason. And
It
it's what you're
is.
saying about corporate earnings. Corporate earnings were what gave such a good year for 2025. There's
Yeah.
hype, of course, and there is extended valuations for sure, but that all comes from excitement around results, and the results were there. They weren't
Mm,
all exactly where we thought them to be,
yeah.
if that makes sense. Like, as in, we're talking about the Magnificent Seven, and only two outperformed the market. But
Yeah. Yeah.
from anywhere involved in the kind of AI infrastructure play, it's just up, 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 and it was kind of untouchable. It was mad to see,
Mm.
really, that like the kind of companies you'd have forgotten about. You were having a laugh when we had this conversation about Western Digital. Do you know what I mean? Like,
Inside my calculator, Mike.
exactly.
But do you know, when you think about hype, I mean, I don't have the exact definition of hype, but it's probably something around a lot of hot words inflate the perception of utility, of the value or utility of a product or service or something like that. But like when we were in the Irish Stock Exchange floor, also known as Euronext, rebranded to Euronext, the ISE is now part of Euronext Group. Terms and conditions apply. But when we were in the Irish Stock Exchange, up on for InvestiCon 2025, which was a brilliant event, brilliant event, and people who are listening should already be penciling in end of August for 2026. Never missed the opportunity. But when we're on the floor, up on the board, which is now more like a museum floor, are effective all the companies that were listed in the late 1800s on the Irish Stock Exchange, and it's effectively two categories: railways and bicycles, right? Now, you would think bikes, there were so many bike makers and they needed to raise capital. And I remember saying to the CEO of the stock exchange, Daryl, man, there was a lot of bike hype back in the day. And we both had a lol. And then I said, yeah, but you know what? It was worth it. Now, the AI hype is worth it. Now, I'm sure if one or two of those bike manufacturers from all those years ago are still in existence today, and I think there are, rally bikes is one of them. Um, it's a good, the analogy holds true for AI, and
Very
that
much
we
so.
are, the hype is there. Of course, it's there, for crying out loud. The
Like,
overused analogy that I use, but Sherman Williams, come on, please stop.
yeah, but
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 it's
but
real, it's real. AI is changing everything. It is utterly changed how I work in the last year.
yeah, very much so. And we're talking about bubbles, like, as in, you're talking about, say, the railroad bubble back in
Yeah,
the
yeah.
late 19th century in the UK was a bubble, and people lost
Mhm.
money. But the downstream effects of that were that so many railroads were built,
Mm,
and the industry that came on top of that was
that's right.
huge. And it goes the
Yeah.
same with the dot com bubble. Like, the dot com bubble was huge, but the amount of networks and wiring and
Hmm.
what you call fiber optics put in from the dot com bubble, and the hype, and people throwing good money after bad at companies that never had a chance of surviving, really sustained the broadband build out from the 2000s onward. And it goes the same, I think, with AI and what we're seeing with this rush for data centers and everything else. Whether it's sustainable or not, and I'd say the argument is not, we're going to need to see some ROI, but it
Oh yeah,
is going
yeah,
to be completely
yeah,
beneficial
yeah.
downstream, and for these businesses and for the businesses that come after it, in terms of the infrastructure build out. So
Mm.
yeah, very much so. And I think you're right. And I think it's a very fair statement to say that 2026 could very much provide the same returns as
Mm.
2025. Like
Mm.
it's what we're
Mm.
saying from the start. Like, is in who can predict anything?
Yeah, I know. It's
If you
true.
came here for 5 things that are absolutely going to happen in 2026, I think you'd be disappointed. But like, you're talking about interest rates at a very basic level. You know, interest rates go down, stocks go up. That should be
Yeah.
what happens. Now, obviously, the thought of falling interest rates will make stocks go up more than when it actually happens. You know, you're buying what is it? Buy the news, sell the event, or whatever else.
Buying the rumor, selling the news.
Exactly. But like very much, I don't think, and I mentioned at the start, there should be a realization that we are on the gravy train.
Uh-huh.
But you know, don't get up out of your seat yet.
Oh, yeah. In fact, don't get up out of your seat at all, folks. Stay with as you
Yeah,
are. Give it 20 more years.
exactly.
Mike, I think following profit, it's back with a bang. 2026. Will I move on to following profit, or will we make this the world's longest podcast
No,
ever?
dude, you better do following profit quick.
It felt like a good one. I don't even know how long we've been talking, but time flies. I went to see Marty. Oh, what's it called? The new
Marty
movie.
Supreme.
Yeah, did you see it?
No, I'm waiting to see it. Good.
I sat down and then bing, stood up 2.5 hours later. It felt like seconds. I
Wow.
loved it. Bit like this podcast. It's probably been 8 hours. It only feels like two. Following profit. This is where you or I, Mike, spotlight one of Profit's current 10 stocks, which is our just tell me what to do service. It always holds 10 stocks, folks. Isn't that easy? And it rebalances monthly, which means you only have to do something once a month. How easy is that? As usual, I am going to caveat following profit with the following. We are talking about a company in the knowledge that our service profit may sell it in a couple of weeks. We do not know. And last Friday, the service sold Ulta Beauty for 21% profit and PROFIT. And I discussed Ulta on this slot not too long ago. Do you remember it, Mike?
Yeah, no, absolutely.
Yeah, it was only a few weeks ago.
We're very contradictory, two
Hmm?
flipping brutes talking about
Oh, we
makeup
were.
and all the rest.
Let's
Yeah.
have Emmet and Mike talk about beauty products. Ridiculous. Anyway, I discussed Ulta on this slot a few months ago, maybe just a few weeks ago. And so I thought I would just tell our listeners what it was replaced with. So it was sold on Friday. And the one it was replaced with, I will tell you with no great commentary because I haven't had a chance to look into it, though I'm familiar with it from way back when, is Wesco International, ticker W. I think its ticker is W. Terms and conditions apply, caveat emptor. So Wesco International is a leading global distributor of electrical, industrial, and communications maintenance, repair, and operating products, along with advanced supply chain management and logistics services. Do you know what Wesco is? It's the company your uncle worked at his whole life. You didn't really know what he did, but you knew he was important and he was in maintenance. So that's what Wesco is. Okay, folks, listen to me. Profit is still only $999 a year, but if you want a New Year's present to yourself, it's 50% off until the 12th of July. Why would you subscribe to a service for $499 a year? Two reasons. One, it has had face melting results. It smashes the market on a repeated year after year basis. We've 17 full years under our belt with that system, and it has had nothing shy of miraculous results, hence the name Profit. And the other reason you'd buy a product for $499 is, do you know what we do here at My Wall Street? You keep the price point you get in at. We will not jack the price up for you to $1,000 next year. So pretty sure I'm right saying that. Yeah, I am right. What the heck? What the heck? I'm the founder. It can be right. So go to use profit quick. Get in there before the 12th of July. You'll be able to get the most, I think, transformative investing product of our age for half price. And you know, Mike, where we're going with the rate on that product in the year ahead. So half of what it is now is a pretty good deal. So there you go. Use profit. So Ulta Salon, 112 days in the folio, sold for 20% profit. all the cash was lifted and shifted and dropped straight into Westco International on Friday. That's how easy it is. Every 4 weeks, it tells you sell these two, take the cash and buy these two. See you in 4 weeks. Isn't that lovely?
It's great. It's
Thank you,
great, and
man.
it's a great way of getting involved. If you're not too sure about investing, or if you don't have the time, that's what we talk about. It's 5 minutes a month, and
Yeah.
that's it.
Yeah. Beautiful. Okay, Mike. We're back. We're back, baby. The stock club's back with a bang. Do you like my new neon sign?
I was about to say, yeah, I was just about to point it out. You're beautiful. If
Yeah.
anyone's watching on YouTube, Emmet's got a little, how do you describe it? A little neon stock club
Neon sign. It says
right
stock
behind
club.
his head. It gives
Uh-huh.
his room a nice eerie blue light to it.
Yeah. Actually, it is a bit, the blue's a bit drab. So
I don't know about,
I turn it off during the week. I switch it on for stock club.
yeah, okay. All right. On that note, Emmet, thank you very much for joining me, and thank you everyone for listening. We will talk to you next week.